So guys, welcome along to this mentorship video. I'm going to go over a few things in here today. I'm just going to go over really some price action. I'm going to explain a few things as well, which I hope will just kind of reiterate what we're trying to do with the way we trade. Um, if everyone here remembers or was in the Discord earlier today, I was talking about either this discount area, which was highlighted, or the imbalance, which was highlighted. Now, as you can see, price action came into that imbalance. Let me just get rid of this. Okay, price action came into that imbalance to the pip and actually hit the overall target. So one thing I would say, guys, is if you're in that Discord, make sure you look at the analysis that's being put out because a lot of it does play out the way we anticipate it will play out. It's the same with the London sessions and the New York sessions and things like that. Certain things happen, go in certain directions, and this is all based around the fact of where the analysis come from, which was the daily time frame. Now, if I kind of delete everything, I always start from a higher time frame. Everyone knows this by now. And what we are always looking to do is wonder which way price is going to go. Firstly, which way do we want price to go long term? And by the way, I'm talking to you as if I'm trading one pair, okay? And this is transferable to any forex pair, crypto pair, indice, metal, whatever you want to call it, because the analysis works exactly the same way. Okay, I only trade really this pair and NAS, and I would always recommend if you are trading a certain way, in any case, you should always be focusing on one pair. Really, really get to know that particular pair. So what we've got here is a weekly time frame. Now, obviously, we can see the last couple of weeks have been very, very bullish. And what actually happened is, if we look at this area here, price expanded very, very high. And then the previous week, price came down and created this area of imbalance right here. Now, as you can say, this week's agenda has been to come lower. And actually now, as we go towards the end of the week, we're coming up to the halfway mark of the week now, but looks like we're going to start making a push to the upside. You can see that price was moving higher, came lower, is now moving higher. So you can already tell we've had a bit of a wishy-washy week in terms of price action and things like that, which isn't a problem. But on a higher time frame, we're thinking and looking at this imbalance, which sits right there. So as we now know that, we can obviously look at a daily time frame and see how it looks. And you can see a bit more of the expansion. You can see the expansion started from this candle, pushing all the way up to here. This is the high that was created. Price has been retracing down to this level and reacted in this imbalance. And if I actually refine this into daily imbalance, which is pretty hard on the iPad, but I've done it, you can see that we poked into this daily imbalance. So there's a couple of things to consider. Is this the area we want price to push higher from? Do we want to make another move lower? Because as we can see, we've had 1, 2, 3, 4 days of bearish moves until we had this up move, and then 2 more days of bearish moves to actually get to this imbalance here. But we did create an institutional candle. And after creating an institutional candle, yesterday's price action was that we pushed all the way up and respected that candle. And today's price action, hopefully you guys can see the little wick there, which actually creeps above this daily candle. So the previous day, and these 2 daily candles here is actually making its way lower. So that there indicates to me that price action should come a little bit lower, maybe just fill in more of this imbalance. If I get my Fibonacci tool out and I'm measuring this entire expansion here, I've got the simple Fibonacci on, I can already see it's inside a discount level. We're not in a discount level anymore, but price can come to a discount level if it wants. The 70% will be around here, the 80% will be around here, probably where this candle is here. But I'm not too worried about that at the moment. I want to take you guys through a very, very simple process because this is the thing, guys. Forex trading with currencies, indices, whatever. It is the execution, the skill to master is very, very simple. Where people get thrown 99.99% of the time is the psychological aspect of it. Lack of concentration, lack of motivation, because sometimes this does get boring, or frustration, anger, hurt, sadness, everything. All the emotions come in and really put you to the test. And if you want to be emotionless and sit there and trade by the pool, as you say, then you've got to be sitting there really comfortable with what you're doing, comfortable that you've done your analysis, comfortable that it's going to go in a certain way for the day. So you're looking at one particular pair, you've analyzed that you think it should probably go in a certain direction for that day, and it should probably work out. And if it doesn't work out, well, do you know what? We only risk a small percentage of our account. Therefore, we are only going to be losing a very small amount if the trade goes in the wrong direction. I take losses just as well as anyone else does as well. Difference is I'll go back in and without the emotion attached to it. And that's kind of what works. And that will work for you guys too. It's just time, but it will get there. But as you can see, today price action has pushed higher and it's actually made its way even lower. So if I was to predict which way price is probably going to go tomorrow, I would actually hazard a guess that at the very least we're going to make our way back down to this candle, just because this is a candle which happens to be in drawdown. And we've obviously got these lows here, previous day low, another low from the week. I'm guessing that's the weekly low just by kind of eyeballing it here. I would be surprised if it wasn't the weekly low. So it wouldn't surprise me to see that on a Friday, tomorrow's Thursday, and then on a Friday, we actually attack the weekly low and create a new low for the week, which obviously would contribute to a bearish week, filling in more of this imbalance on the daily and the weekly time frame. We have got further, we can go. I do believe long term, this is still a very bullish pair, and I'm basing that on the fact that we can see it's extremely bullish. This is obviously just a short-term retracement. This is the low. This is the high. Anything that goes on in here is counter trend. Not to say we can't get really good sales. We can. And I'll absolutely show you how you can get them and things like that as we dive deeper. But we can see here, price is if it comes below there and breaks that structure, then yeah, I'll start thinking maybe we can start coming for some of these lows down here. But I'm happy in the fact that we are overall bullish, even if I'm predicting that we're going to be bearish for a day or so. So then what we're going to look at is really what's been going on, what has happened. Now, from a 4-hour point of view, we did break this structure here. We didn't fill in this imbalance. We did spike up into this wick here. Price has obviously been acting as a lower point to take price to this imbalance, which still exists on the 4-hour. But actually, what we've ended up with now is a break of structure to the upside on this 4-hour time frame, which could indicate that this would push higher. And when we go look at the daily again, it's kind of contradicting now, because the 4 hours influenced a break and the daily isn't matching that because the daily hasn't broken. So there's two different things kind of going on at this stage. And all you have to be doing is looking all the time, where is the money? Where is there equal highs, equal lows, relative equal highs, relative equal lows? But among all else, the other things we look for is session highs, session lows, because on a daily intraday basis, tends to be what price actually goes for. And as you can see, price has broken structure, creating this expansion to the upside. It has broken above this area, it's broken above this area, but not this area. Now, this is an area of support from the daily time frame. 2 daily pushes up indicate that there is your daily resistance. It might resist for a while and come lower, and maybe we'll come into this area here to push higher, meaning that overall we are fairly bullish, which would actually suit us. So what we're using the daily for is that ideally we get into this area here, and I'm talking now what I would like to see happen. I would like to see price resist this area here. So from the day, I'm flicking between the two, by the way, guys. This candle brings us lower, but actually respects this candle in terms of body weight. But from a 4-hour perspective, we come back into, and I'm going to measure the fib levels again. We come back into, it was this expansion. I'm going to ignore this for now. We come back into at least a discount zone. What I would like to see happen is us make a sweep or a run below this low right here. If we can run below that low there, but actually respect this area, I will 100% be looking for buys at an extreme discount rate based on this area here. But what also would happen in this situation is we will fill in, hopefully, a little bit more of this green imbalance, which represents daily imbalance and weekly imbalance and 4-hour imbalance as well. So another area where hopefully we can attract pricing too. So when we look at what has gone on an intraday basis, because we don't, I've not really answered the question, what are we going to do today? Now, we can kind of see things and the benefit of hindsight and things like that. You can see here that price has obviously made a run above this liquidity and dumped to the downside. And this was an area, a target we were looking for. But overall, we took buys today in a bullish market. And again, I'll just measure out this area here because this was the range. And we spoke about this in the Discord. Okay, we identified this discount level right here. Now, this isn't the most accurate drawing. I am just trying to get this in for you guys. But there's a couple of things you look for. So in this expansion to the upside and in relation to time and price, we can see a lot of consolidation around this area here. Okay, you can see a lot of consolidation, and you can see that today, looking at Forex Factory and things like that, we had news which spiked us lower, spiked us higher, then come lower, and then it's obviously broken lower, come back up to this area here, and it looks like we could potentially come a little bit lower again. I'm still, as much as we called this area out here, okay, we called this area here in the Discord today after calling out this discount area. And that was just based on the fact that it was going on as I was talking about it. And I noticed that we literally filled this imbalance to the pip right up to the very point and then started reacting to the upside. But for me, this discount area is still on. At least come in to 50% into this block right here, maybe into some of this imbalance. It might not come any lower just because it's fairly balanced and things like that. But if anyone can venture a guess, what would we potentially rely on if price is going to come around here, respect this level to the candle, but actually close below here? You probably would have guessed it. It would be that we would hope for some high impact news. And this is where we use news to our advantage, because when we actually have a look at what's going on, if we fast forward to tomorrow, we can see 1:30 UK time, which is 8:30 New York time, which is a very important time for the algorithm. Usually there's news releases. So it won't surprise me if tomorrow we do get a little bit of volatility. Maybe we're hanging around here and we get a volatility and just take us a little bit lower. And if it doesn't take us any lower, or it at least takes us to this level here, what have we spent the whole day doing? Okay. From the New York session, and I'm just going to draw 1:30. I'm gonna have to go to a smaller time frame to get that a little bit more precise for you guys. So 1:30 is a very important time frame, okay? Because what we can see is that at 1:30 we started pushing lower, and that's when we started making our way towards this imbalance. And literally the most beautiful price action, because it literally filled it to the pip. And then you can see, looking at this 15-minute area, we came above, we came in, and we're starting to respect this area now. So we actually broke structure to the upside. Price came into this level here, filled in that imbalance, and then broke higher above. In terms of targets, we spoke about these areas. Okay, we were looking, it was on a 1-hour time frame. The target was, this was the previous day high. But if we look to the left, we can actually drag that all the way across, relative equal highs. So that was always the target of the day. And for anyone that wants to trade on small time frames, you can see here, after 1:30, we made a close below all of this liquidity. Price expands very, very aggressively, breaking this structure, breaking this structure. Price then comes back, fills in this imbalance right here, respects that breaker block right there, and expands to the upside. You can play this on 15-minute timeframes. You don't have to travel around on 1 minute, 2 minute, 3 minute timeframes if you don't want to. Don't get me wrong, if you want to, you can. You accept more risk with your trading because of more volatility. You will get stopped out more. And that's just a fact. So obviously, if you're trading on smaller time frames, you need to adjust with risk and things like that. But you can do this as just as well on a 15-minute time frame, on a 1 hour time frame. You can even do it on a weekly time frame because look what's happening. Price is inside imbalance right now. I'm not saying we're going to trade off the weekly, but what I'm saying is that price is very, very fractal. And this is what price does. It fills in areas of imbalance. It acts as a magnet for price and it comes back at a certain time. This is just coming into New York lunchtime. The expansion was about half an hour after news. So news is about 1:30. An hour a bit later or 45 minutes later, whatever, you get big push up to the upside, price coming in, filling that imbalance, expansion to the upside. So if you want to be more precise with it, obviously we can start thinking, can we go down to a smaller time frame? And there's a few different entries in here. So, we didn't quite make it into that imbalance there. We did make it into this imbalance here, but there are areas we can look at and things like that. And these areas happen all the time. As you can see, price broke above this area here on the 5 minute. You could have played off that institutional candle. No, there wasn't any imbalance, which kind of makes it a little bit more of a risky trade, but it did play out on a day like today. It was a day for wicks, which is unfortunate. I don't like this, but in my opinion, there was a reason for it, and I'll kind of go into that in a minute. When you look at the 3 minute time frame, again, this is probably the best entry of the day because what you actually got was price expanding from this area here, taking a bit more liquidity out off the imbalance, expanding and filling out this imbalance right here. And the thing is, guys, I've got 4 monitors plus an iPad, which I'm on now. This is where I sort of key in my orders, and everything else is just analysis. And on different time frames, I've got different charts, but I've not got different pairs. Okay, I've got the DXY, which is on one chart, on one monitor. I've got a two split with the daily, the 4 hour. I've got a 1 hour, I've got a 15 minute, and I'm sort of eyeing up a 1 minute and 2 minute and flicking between the two. But I'm looking in at the 3 minute time frames. I'm not having to kind of change around and things like that. So I've always said this before, guys. If you can get yourself in a situation where you can have more than one monitor, or you can do certain things with your trading view, like if you come up somewhere, there's something you can do, which like full screen mode here, you can actually change it somewhere here, select layout. You can change it if you only have one monitor here. So it actually works a lot better. So you can actually see more than once. You can see the bigger picture. I would absolutely encourage you to play around with that because if you're searching on a 1 minute time frame, there's a good chance you may have missed out on this. And that's not the hope. And I didn't get in here, by the way. I noticed this probably too late, but this is just something to kind of be aware of as well. So looking at a 2 minute, and this is where I did get in, I actually saw price expand. I saw this imbalance right here, and then price came in. I played it off just this institutional candle here. My stop loss was right under here, and I was probably about 0.3 or 0.4 pips away from actually getting stopped out. It was a bit stressful, but price did push higher. And then it gave you a second chance for entry, which is again 2 minute entry, bigger area of imbalance. If you see price jumping lower on a 2 minute time frame, you might think it's probably going to go even lower. It's coming in quite fast, but actually it was just coming in to fill in the smaller imbalance, which laid on the 3 minute area. And then likewise, when we look at the 1 minute area right here, you can see the same thing. So there's an entry level there. Okay, the same entry for the 2 minute, for the 1 minute. It didn't look as clean, but from a 2 minute point of view, what I was looking at, I lost it. Hang on. It was, so this big push up here, this was a big expansion. Price came in, left that imbalance in there. If everyone can see it, it makes a bit of sense. Whatever happened in here was just needless drawdown that was just taking a lot of losses, a lot of stop losses out. You can see that a lot of people, when you see stuff like this, a lot of people are getting in the market in this area here. So it was taking a lot of areas out and things like that. I wouldn't have surprised me on another day if price had have come a little bit lower. But what I mentioned, guys, was in terms of predicting which way it's going to go tomorrow, and I am going to kind of simplify how to break this down to get this trade in a minute. But why do I think now price is going to potentially come to this discount area at the very least? If I actually look at a 1 minute time frame, Tian's put a comment in very quickly, but it didn't take the low of the lows. What do you mean, Tian? You're talking about this entry here. So it took all these lows here. The entry was here after taking that low. Whatever happened in here, no, price didn't come lower than that, but this is just drawdown. This could have easily taken you out, but it didn't. It didn't take me out. Price pushed higher. That was kind of a reason to get back in off a 3 minute chart, if that makes sense. So looking at this expansion to the upside, I still want price to come into this discount level. Now, the reason I think price could come into this discount level is because it has spent the majority of the day creating all of this liquidity right here. So I really would not be surprised if we see that intact for a certain amount of time. And this is actually a reason to take price a little bit lower. And even if we come in and fill this imbalance, which would respect this block here, it doesn't have to come any lower. There is no other areas of imbalance to come down to. You know, yes, we've got a really nice looking candle. It doesn't have to come that low. It doesn't have to come to this area here. But what we have got here is a very, very vital low. That is the New York session low that has happened today. Up there is the New York session high. So when you're looking for entries, you have to be looking for these types of accumulation and distribution entries after they have taken out significant highs or lows. If I look and turn on this area here, this is the New York session. Price came in, took out the London low, targeted the London high. London session dropped a little bit lower at 9:45, came in just below, targeted Asian session high. So we took out the Asian low. We then took out the Asian high. If you miss all of this stuff going on here due to living life, school runs, whatever, well, that's fine. You don't have to be in right away, early in the morning. You can jump in when price has taken the high. And then you can profit when the New York session traders are waiting for price to take out the low. So today, New York session traders, so I was waiting for us to take this low. It took this low, came into this imbalance. It made sense from a higher time frame point of view for it to take this low and not this high first, because overall we're bullish, but we want to see manipulation. We can see the low. But if you're in up here, which is about 11:45, 12-ish, you can see if you'd have got in here somewhere, price, the target, London low. This imbalance right here is a perfectly good target. You can get in on these trades. There really is time to take these trades. They don't happen every day on every single pair, but a lot of the time it happens after big swing movements. And I would always say, I've highlighted this area here, the 1:30, which is 8:30 New York time. That is like, you know, on Wall Street, if you've ever seen Wolf of Wall Street, where they ring the bell every single morning, the opening bell, and everyone starts cheering and everyone starts swearing and ringing up all these people and taking everyone's money. That happens on Wall Street, 8:30, which is 1:30 UK time. And all you have to do is look to the left after analyzing where you are on a higher time frame. After analyzing all of these different things, you have to be looking to the left. What has happened? Where is price going? You can see it now. I don't trade at 1:30 because typically that's when news comes out, but it usually makes its plan for the day. You can see price is pushed at lower to push higher. And I said this right in the very early days, price sells to buy and price buys to sell. So we sold off to buy, bought off here, took that liquidity to sell, sold off to buy, bought to sell. It happens. It just goes up and down, up and down, up and down. When it consolidates, we're not interested. It will usually consolidate when there's not high impact news for the day. So if there's not high impact news for the day, it will usually consolidate. And it is literally as simple as that. And you can back test this all the way. If we go back to the previous day, look at up in here about 1:30. This is at 1:30. Price took the London low. Price ended up going for the London high. What did the London session do? 8 a.m. That's the open. So for the London session, the line I want you to start getting used to, and this is even if you're trading later in the London session, because you could get on a piggyback of a move or something like that. 7 a.m. So this line right here. Look at where the direction it might be doing, because usually you get a bit of news and things like that. Price action pushing higher. We can see at 8 o'clock started moving lower. If you miss all this sort of stuff here, again, maybe at 11 o'clock, there isn't really anything, because where is this thing off to? Well, clearly it's now targeting this Asian low. We can see prices pushed higher. Asian low is the target. You're not going to trade until it's taken that level there. This is where price is working out. About 12:45, 1 o'clock, price comes in, pushes higher up. 2:30, price takes down. 3 o'clock, which is 10 a.m., another very vital time in the New York session, fills in the rest of that imbalance, pushes higher. Again, you can be on the 15-minute time frames. You don't even need to come any lower. Not saying that you shouldn't or won't or anything like that. You don't have to. This works, guys. It works on all time frames. If we go back again, look what happened. Does anyone know why this is a particularly aggressive move on New York session? Because what ended up happening on this day here, Asian session was created. London completely dumped to the downside, consolidated. New York session completely expanded aggressively to the upside. This is all to do with time and price of why this done this on this particular day, why this is the most dangerous day to trade if you do not know what you're doing. Monday. Look what happened on a Monday. The first thing we did was take out previous low. So previous New York session low from before the weekend. A lot of liquidity will be under there. That was the London session agenda. Price has expanded, came right down, extremely aggressive push up. Not only does it take London's high, it goes for the Asian high as well, because there's liquidity there. And what it's doing, it's taking out both sides of liquidity on a Monday. So on a Monday, you can expect these volatile days. And then when it comes in, you can see it calms down a little bit. You don't get as much movement in Asian session, and you just get the normal sides of consolidation. But in all honesty, I would really be waiting to see what's going to happen. If you're a London session trader, where are you in the Asian range? Where are you in the low, the high, and things like that? Now, let me just draw something out, because and I guarantee this will be a question some of you will be asking. And it'll probably be something along the lines of what happens if Asian session is massive, something like that. Okay. Then, and overall, let's say we know we're bullish and things like that. What happens, or even if let's say we're bearish, for example, well, the chances of price reaching for this high here, if that's the Asian high, is quite unlikely. Where you need to be in this situation here is on a 15-minute time frame. Okay, on a 15-minute time frame, if price is down here, let's say this is this can be 8 a.m. or it can be 1:30. I'm talking UK time, by the way. So this is the 8 a.m. or because this is basically the same way. If London session's really aggressive or Asian session's really aggressive, PM. So let's just say this line here represents that. So let's just say this here indicates previous session. So if you're London session trader, this is Asian session. If you're New York session trader, this is London session. Hopefully I said that right. All you have to do, and let's just say, you are bearish overall, you need to be looking to the left. You can identify that price is a long way away from here, from the previous session high. But we know we've got like lows over here. Let's pretend there's a low over here we want to go for. You need to wait for a liquidity draw. Yes, sometimes we do that and no liquidity draw happens. When that happens, no trade. No trade for me at all. I'm not interested. But what you can do is you can identify, and this happens and this works, just the next high. Because I promise you, it will make an engineered move for liquidity. It 100% will happen. It doesn't have to go this area if the range is too big, but it will do something. And then when you see something like that play out, you can anticipate the distribution move, leaving the imbalance, the exit, the entry, whatever, and then you can target the low. Even if there's no obvious low, it's going to come for that low because overall you're bearish on a higher time frame. Likewise, if price was moving higher and price came in below that low, it could easily just push high from there. Or if it broke above there, it came in, it would reaccumulate in this area here anyway. You just got to be a little bit more patient. But again, I would want to see this low tapped into at the very least. So you can look just for the next range on the fifth. And the reason I say 15-minute time frame is because you tend to see highs and lows being formed. And you'll tend to see a cluster of liquidity. And that's the areas you need to be looking for. It doesn't have to be this big area here. In an ideal situation, what we end up coming into is just consolidation. So it can just take a draw on the London low, the New York low, the whatever low. And that is the interesting thing we want to try and spot. I can probably spot it now, to be honest. If we go a little bit, look, there we go. Right here. This is great. Okay. Absolutely amazing because what can we see? Huge, huge move, Asian session. But what can you see right there? You can see a previous high. Price is bearish. We don't need to be a genius to work that out. We can see it's not going to come for this high today. Not at the moment. If it is going to go for that high, it's probably going to happen in the New York session. If it's going to happen in the New York session, I'd rather see price maybe close lower and then close higher to distribute, but it hadn't done that. If you got in on a 1 minute time frame in here, your exit should be here anyway. But look what happened. Price action closed just here. And then you could have got in here. Could have got in here for a buy into there. We consolidated. What happened in New York session? If I get the 130 area, expansion to the downside, taking out that London low, taking out that London low, a lot of liquidity which was taken, moved to the upside. Target, maybe not the London high, but look where it did target. Just a previous high. And that's it. Just look to the left. Look to the left. 7:30, 7 a.m., whatever you want to call it. Price, you can see it didn't happen at 7, but price came in at the open, pushed higher, came in, and you could have got in there. You can see there again on a 15-minute time frame, price breaks, comes back. If you didn't get in, if you played off the candle, you wouldn't have got in there, but you would have got in right there. Again, 15-minute time frame, guys. You don't have to trade on smaller time frames to get very profitable results. You could be targeting some of these lows. It happened. If you got out, maybe you'd have been back in drawdown or break even. But if you held it all the way till now, you could have been really profitable. And this is all you're looking for. I would honestly urge you guys, pick whatever pair you want. Backtest it. See what happens. London Open and see what happens. New York Open. You get trades. You get opportunities to get in. But I am not, and I want to just stress this out to you guys again. I am not getting in a trade unless I have seen a decent move, a decent run on liquidity. You can see in here, decent run on liquidity. Price action was really crap in terms of entry in there, as we already showed you, in terms of on the 1 minute time frame. The best entry was on, well, the 15-minute or the 3-minute. There was a great one in there as well. But we can see we took that area there. And then we started moving. London session as well. We took this area, we took this area, we moved lower. It obviously doesn't take a genius to work out on this particular asset, the best time to trade is probably in the New York session because you can see price pushing higher. But if you go onto other pairs, you will see really good moves in London session. It's about trying to figure out what pairs you want to trade and when you want to trade them. So when we look at like pound dollar as an example, you should see a little bit more movement here in London session compared to New York session because the London version of Wall Street in London, the bell opens at 8 a.m. Well, 7:30, but 8 a.m. you get a lot of volatility in the market. Coming in, taking these areas, pushing higher. London session, pound USD. What did it do? Price comes down. This is 7:30, 7 a.m., 7:30, that magic half an hour. Price comes lower, respects this level. It comes into 8 o'clock. What do? We push higher. Got to be a little bit patient. Wait for that push on liquidity. Where's the target? Coming down here. We can go again. London session. Price comes lower, pushes higher. New York session respects those levels, pushes higher. So, look, you can see it works. You can see a little bit more manipulation. I'm guessing this would have been a high news event. Maybe this isn't a trading day because of the news event that would have been going on. That's fine. We can worry about that later. What can we see here? Asian session, price pushing higher. 7 a.m., big push up. You can see the high. And like I said, guys, just highlight it. Highlight these levels. 7 a.m. UK time, 1:30 UK time. And look to the left. Has it taken any highs? So what I spoke about here, what happened in New York session right here on a 15-minute time frame? Price action, London session, made a low, made a high, short-term low, high. Price didn't come in here. Did not happen. But, and I'm just going to get rid of this line. Imagine this line is here because I'm going to delete it. So just imagine the bit line there. That's the line. And the reason I'm doing it is so we can see better. We did take that low there. As soon as we took the low, we moved higher. Like this happens every single day. It doesn't happen as perfectly every single day. It doesn't happen in the, like here, it doesn't look like a particularly clean day. You can see the high there wasn't broken. I always press that button. I don't know why. So look, we actually created equal highs there. That would have been a New York session target, but we created those highs. Didn't come for that high. You wouldn't be sitting there at 8:30 with a line all the way across because at 8 o'clock, when you're looking at the charts, this doesn't exist. But it did take that high there, and then it started moving lower. So like I say, use the vertical line. It doesn't matter what time you trade. Make sure they're on 7 a.m. UK time, 1:30 p.m. UK time. And just look to the left, even if it's a short-term high or low. And vitally, among everything else, you have to really understand where you are on the higher timeframes. So and if I delete everything here, where is this thing going and why is it going at such a pace? We can see we've had a bearish day today. We can see we've got this area here in drawdown. If I measure the expansion, and I'm using this expansion, not this expansion. So this is the area I'm using. I'm doing that. And I've said this before, and I'll just say it again. But the reason I'm using this expansion, because a lot of traders will say, yeah, well, that's the expansion. That's fine to use for an expansion. But for me, what happened is price pushed higher, price rebalanced itself, price pushed higher again, filled in this imbalance, came into this order block, price aggressively moved higher, leaving loads of areas in drawdown. That's the area it's more likely to come into off this expansion here rather than here. This is just wasting space from the fib levels, in my opinion. I would rather see it come in. So I know this is probably a deeper discount than what you would think. If you had it all the way down here, you might actually lose out on a trade because the chances are it's going to come to that candle anyway and move higher. You might think, oh, I got in on 50%, but actually, no, you didn't. You probably got in on around 70% or something like that. Better discount area. So that's what I like to do. There's no proven factual, incorrect or correct way of doing it. I've just noticed through the stuff I've done, the way I've learned it, the people I've learned from, that's a better way to measure this particular range. But we can see on this data time frame, we're coming in. Are we going to come to this candle? That would certainly be my target. But when I go to smaller time frames, as much as I've got this as a target, I am aware that we are closing below this liquidity right here. We've got this internal liquidity here. We are in a discount level, even though we're not quite at the daily candle. We are in an area we could move at any point. We have started to react. As far as it goes at the moment, I would be looking at this area of imbalance to see if we're going to reject from there. If it goes higher, I'd be looking in this imbalance. If it goes higher, there's nowhere to look in here. I'd be hoping for a break to the upside, in which case I would be on an intraday basis. So let's say price shoots higher, it will start doing something like this probably. You know, random consolidation. This is obviously from a higher time frame point of view. If I highlight that area there, and I'm just going to draw you out another area, what are we going to see? This is a day area. We're probably going to see consolidation. So this will take us into London session. If we're overall looking to go higher, and we know there's not really a chance of it reacting, we want to see it grow a little bit lower, engineer liquidity, accumulate, and then carry on in its way so that that happens right here. It's not very accurate drawing, but that's how you get in on a daily format. If you're halfway up the range on a random area, it's about looking at where the session highs are, where the session lows are, and working our way up from those areas in there. It is as simple as that, guys. You know, I don't mean to kind of go on and keep saying things like that, but this stuff works and does certain things, and it's all based around time and algorithm. Doesn't look like there was much of a trade for me on here today. We did sweep above that area there. Maybe there would have been something in London session. So the fact that we closed above this, we didn't close above it, but we swept above it right here. If we come a little bit deeper into here, what did we see? So we saw price come higher, expand lower. That would have been a nice entry there because you can see price did come high. Now, it wasn't a very good break above, I'll be honest. I wouldn't be too keen on that. And it did try and perforate through, but it obviously didn't make it. If we come a little bit lower, 2-minute chart, again, you can see the imbalance. You can see the aggressive nature in this move coming lower. You can see prices come into this candle pretty well, to be honest. And again, if price comes in, moves down again, and you see it moving lower, you can still get in. If you get in here with your stop above there, you're still going to profit from it. You know, when we look at a smaller time frame, and again, you should have charts around you all the time. You should have charts around you all the time because there's actually multiple entries in here now. Okay, the first entry is right here. You can see the imbalance which has been created right there. Huge expansion down. You could have gone in here. You saw this push down lower and lower. There's another entry right here, there, even there. So look, imbalance in there, price pushing up, price pushes lower again. And in all honesty, guys, you can get in on these pairs until price has taken lows. So that low there was taken. Maybe that would have been time to come out. But when you look at where it's obviously going, maybe when the Asian low was taken or this low here was taken, you could have potentially come out of it. But you can see price came in even lower and it was really, really reacting quite well. You know, if we look at a higher time frame, there's probably reason. So yeah, you can see all of these. There's probably a previous day low or something like that in there. But that is it, guys. And you can see this expansion coming down, targeting these lows here. That's clearly where it's looking to go. But on a higher time frame, yeah, we're inside a discount level, but I want to see price move a little bit higher when it gets in there. Likewise, when we look at the indices again, it'll be interesting to see what way it goes tomorrow. Because I think Asian session tells us a lot. And that's honestly why I trade New York session, guys, because I get more information and data. London session is great for intraday scalping moves, but New York session I feel like can get you bigger and sort of bigger ends of it because it takes out another sort of session liquidity and things like that. And what I'm going to do, guys, in the next sort of couple of weeks, I'm going to explain to you other areas of liquidity from previous day New York session lows and highs. So, for example, we can see that price has gone for this area here today, and it's taken yesterday's New York session. Yes, that's previous day high, but you can see here price action came higher on this day and took out this high, this high. These here, guys, they are areas of liquidity. It is not unreasonable to quite literally just mark these levels out. Not that one because it's obviously been taken, but you can mark these levels out. Because when price is moving higher, it's going for something. And that's the key to it, guys. So where is price going to go tomorrow? What can we see here? What liquidity has been created for London session, for New York session? That low, that high. What's going to happen here in the Asian session? We don't quite know. It could take one of these areas out. If you're an Asian session trader, you're not really best suited to US pairs if you're an Asian session trader, in my opinion. In my opinion, you're better off picking a pair that is volatile during those times, like Aussie, JPY, and things like that. But London session will take out Asian session liquidity. It will take out highs and lows from previous day. So will New York session. A New York PM session might end up taking out the high that New York created from the AM session or the low that was created in there as well. So hopefully, guys, that is making some sense. And hopefully, well, it's my hope and intent that it has clarified and installed a little bit more confidence into you guys going forward. And I think the main take on this, I would say, I'd suggest is firstly, if you are trading one pair only, great. How many pairs are you trading? Can you bring that down to just one pair? And also, the homework really to go back on today is just you don't, because the thing is, I'm saying 15-minute time frame. We know entries happen at highs and lows on smaller time frames. That's fine. We know the entry model we're looking for. What I want you to look at is your time window. When can you personally trade? Are you a London New York overlap trader? Are you a London Open trader? Are you a New York AM trader? Are you a New York PM trader? Whatever you are, backtest it, highlight this your trading hours in a box, look to the left, see what it's been doing just for a couple of weeks. Just go back a couple of weeks. I'm saying 15-minute time frame because you can get a clear view on structure. You can see a lot of entries panning out, which will give you confidence to take 15-minute entries if you see them. And then also you can go by the days pretty quick. So we can see like, yeah, okay, London session, New York session, price pushed higher, this New York session, price pushed higher. And if you don't see any movement, if you get to like here, London session, oh, there was nothing here today. Well, why didn't that happen? Or that's a bad example, but if you see like a really crappy nothing, where it didn't, I mean, look, in all honesty, it's swiping liquidity all these days. Here we go. Nothing happened this day. What happened this day? On a Monday, it probably means that in this particular day, there was no news, no high impact news. I wouldn't mind betting. Go and check 19th. I bet there was no news. When you see these areas here, there's usually news. And that's hopefully that also gives you a bit of confidence to trade news because news doesn't have to be the bad guy. The only time news is the bad guy is when it's stupidly highly volatile, like the classic NFP week and things like that. Usually the end of the month, the start of the month. But I only don't trade for one day of the week when I see the news impact coming. I just give myself a bank holiday every single month. It's perfect. Like, that's what more could you want? And this is where you guys will get to. You don't have to be involved in that noise. And if I see really high impact volatile news coming in at 3 o'clock UK time, then I'll wait until after 3 o'clock. Fine, fine. That's it. um, any questions, guys? Any questions, comments, anything like that? Can you still trade if it's not in a POI? You can, it's just not as highly probable. So I would always say trade when it's at a POI. So like today's trading came in an overall higher time frame. The POI was the imbalance. And it took out this liquidity here. So that's what made this a lot more highly probable. It wasn't a nice trade to be involved in, but it was a POI. So I would, yeah, just even if it's on a 1 hour, just make sure you're in an area where it makes sense that price is going to drop to a certain place and then come a little bit lower or higher and then gravitate towards where you want it to go. But hopefully you guys saw that I did this from a higher time frame. This is all about coming and working away from the daily all the way down, even to the 1 minute when you're actually taking your entries. Any other questions, guys? Has anyone got any comments to make on what we've seen or what you've kind of learned today? Has it helped this information a little bit more? Hopefully you can. Hopefully this will really, give you guys a bit of a bit more confidence with your funded challenges and things like that you've got going on. Because and the thing is, guys, as well, it's about being patient. If you don't see them liquidity draws, there's no trade. There's no trade. If you do a day's work and you do not press the buy or sell button, that is a good day's work because you're saving your account. If you see an entry that played out and you didn't press the button, I'm still proud of you. Because if it didn't do what you wanted it to do, you are not being forced by the market. You are waiting for the market to meet your conditions. You're going to see trades play out when you don't press the button and they don't meet your confirmations. But that is what's called a 50-50 trade. You want to wait till the trade is 75% in your favor. So Rachel says that's something I need to learn not to get trigger happy. Absolutely. And do you know what? It does take time. It does take time. There's no way around it. And the only thing you can do is just wait. Tiana said here in the comments, say it grabs session top or bottom and it turns but doesn't give a move. Can you still trade continuation move? Yeah, I mean, look, so this kind of happened today because I mean, you can see here price. This was the imbalance was the reason I took the trade. I actually was on a 2 minute, but it's the same thing. But look, we took this liquidity, we broke above, we gave imbalance. It's not a great looking trade because there was a little bit of crappy movement in here anyway. My low was luckily below here, and I actually took a loss yesterday by being very aggressive on my low, on my stop loss. So today I learned from that mistake already. That's me developing as a trader, and then I'm coming in and making my stop a little bit lower just to give it a bit more room. Don't get me wrong, I'm still going to take aggressive trades, but this wasn't the time to do it because of all the rubbish I saw, and quite rightly so. We saw price push higher, but when you see this here, people think, oh, I've lost out on the move. But when you see this area of imbalance, that is an entry. Like, that is a good enough entry. So if you don't see something happen, then yeah, you can take it as a continuation move as long as you haven't taken out short-term highs. Because look, price came into this high here. And as soon as price came to that high there, look what happened. Price started rejecting. So if you'd have got in here, for example, stop loss here, you could have been stopped out. And then price ended up pushing higher anyway. So it's all about waiting for areas to be taken out as well. Does that make sense, Tiam? So the PM session trade was right here. I can see it already because what did it do? Took that area of liquidity out. Price broke lower, imbalance, entry off the candle. 7:30. Amazing work. Again, second entry imbalance. You can get in these areas. See, it obviously just goes off there. When it takes the area there, that's your target. We could have targeted lower than there. It came below there and it started pushing higher anyway. But in there, down to there, you're going to get more than probably a 3, 4, 5 to 1. Absolute golden lesson, mate. You're very welcome, Tian. I felt quite happy today teaching you guys this, and hopefully it's helped. I would also say, guys, if you have any questions at all, please reach out in the Discord. Ask each other questions as well. Ask each other questions. So, guys, I'm going to love you and leave you. Okay. If you need anything, please feel free to reach out. Okay. Always ask questions. Don't hide. If you're stuck on anything, don't hide. I will get back to you if you just reach out and ask. Okay, guys. So all the best. Take care. Have a great night, morning, evening, day, wherever you are in the world. And I will speak to you all very, very soon. Well done, everyone.